Hello everyone and welcome to my channel. This is Random Guy on YouTube. Today I will be talking about Build-A-Bear Workshop. Build-A-Bear Workshop Incorporated is an American retailer headquartered in St. Louis, Missouri that sells teddy bears and other stuffed animals and characters. Customers go through an interactive process in which the stuffed animal of their choice is assembled and tailored to their own preferences during their visit to the store. These preferences include numerous different stuffed animals, along with varying scents, sounds, and outfits. Build-A-Bear Workshop is the largest chain that operates in this style. Build-A-Bear is a small-cap company with capitalization of $338 million and trades under the ticker symbol BBW on New York Stock Exchange. Let's look more closely on revenue. We can see the effect of pandemic in 2020, and we can also see that the fourth quarter of every year is clearly the best, which stands for a reason because of Christmas shopping spree. Besides that, the growth looks pretty much flat for years. In the third quarter earnings call, the company raised guidance for the whole year of 2022 to the range of $455 million to $465 million. This translates into Q4 revenue of roughly $137 million. If we compare year-over-year growth in the last few quarters, we get 5.5%, 9.8%, 6.3%, and 6.3%. The growth is slowing down since the pandemic recovery, but it continues despite economic conditions. I think it is reasonable to project mid to high single-digit revenue growth in coming years. Build-A-Bear also guided for the whole year pre-tax income of $56 to $63 million, which translates into $24 million in Q4. This would result in EPS of roughly $1.27. The company had profitable and unprofitable periods in the past, but it seems to me that they achieved next level of profitability and growth continues. Or you could interpret the chart as a company achieving cyclical earnings top. That is always a danger. Websites like Yahoo Finance and Finviz.com predict average 30% year-over-year growth in earnings in the next 5 years. This seems overly optimistic to me, and I am not buying it. But if we get even a third of that growth, I will be a happy investor. Margins show the similar cyclicality to earnings, but right now they seem relatively stable. Trailing 12 months PE ratio is around 7, and this is very low for a growing company. Build-A-Bear is expected to maintain earnings in 2023 and then continue growing. Since the company had large periods of unprofitability, the PE chart wouldn't make much sense here, so let's look at price to sales ratio chart. Average price to sales ratio is about 0.5, which is a lot lower than the current price to sales ratio of 0.75. However, if the company continues to be profitable, you could argue this is still very cheap. Build-A-Bear has no long-term debt. They have not much cash on hand, but the current assets are still lower than current liabilities, and the company seems to be operating for years just fine. Since I had some concerns about the future growth, I looked at Google Trends, and it seems that the demand is still picking up, and so far the future looks quite bright. 5-year average income growth is expected to be around 30% year-over-year. I don't think this is realistic at all, and I expect 10 to 15% growth in the future. I also expect revenue to grow at mid to high single digits. The stock price went sharply up in the last few years, but the PE ratio is still very low if the growth continues. There are no signs of demand slowdown despite economic conditions. On the last earnings call, the management complained about currency headwinds, but since then the dollar is moving down, and this might result in future tailwinds. There are also some valid concerns. Based on history of cyclical profitability and unprofitability, this very well might be a cyclical top. However, in the past there was always a clear reason why the earnings suffered. Today's economic conditions are certainly difficult and expenses are rising, but a stuffed teddy bear isn't a large ticket item, like for example a house or a car. Many people won't think twice about buying a teddy bear even when money is scarce. So far, the demand seems to be very strong. Another big concern is insider selling. They may know something, or they might just be taking profits after incredible run of share price. Only time will tell. Now let's go to the portfolio update. It has been a bit of a roller coaster ride in the last few weeks, but the virtual portfolio still leads ahead of Nasdaq and S&P, and while S&P went down slightly since the last week, my portfolio is nicely up. I think it might be time to look closely how individual holdings are doing. Exelixis is going up steadily, and it gained 9% since the purchase. PagSeguro topped at the end of January, but it is still up 3% since the purchase. InMode did very well with 13% gain since purchase. It had very good earnings and was up much more than that, but analysts downgraded it for some reason. Stride had an amazing earnings just a week after the purchase, and it is my best performing stock in this portfolio, being up 37%. Medifast was oscillating up and down, and it is currently 1% up since the purchase. Mustang Digital had bad earnings, and it is down 9.5%, but I still like the company. It is a microcap and the volatility is to be expected. RIG is in my portfolio for only a week, and I bought at the bottom of a small dip, so it is up 1.9% so far. The next company I am adding to this portfolio is Build-A-Bear Workshop, and for $100 we can get 4.34 shares at Friday's closing price of $23.07. Now, this is all for today, and I would like to remind you that I am just a random guy on YouTube and not a financial advisor, and none of the content of this video is a financial advice. I own shares of all of the mentioned companies in my own real portfolio. Thank you for watching and see you next week.